All right, guys.
I think, yeah. So AMD Q2 earnings. We also have StarBucks, Pinterest, MicroStrategy, and more. So again, let me know what your expectations are for this. StarBucks, Pinterest, and MicroStrategy. I'll drop earnings today. What's up, Michelle, Sergio, Leo? What's up, team? And yeah, these are all incredibly relevant for X stocks. Nvidia might have some sympathy movement with this. All right. Again, AMD, we're going to put this up on screen. AMD is expecting AMD is expecting 57-cent loss per share on $4.74 billion in sales. Again, on 4.74. Will they beat or miss? We're going to do a poll right now, as we always do. Will AMD beat or miss their Q2 earnings? Again, vote on the poll. Beat, miss, or as expected. And again, all going to be relevant. AMD, I thought it had a super high PE ratio. It turns out their PE ratio is only like 38 or something like that. So again, bullish or bearish? All right, so we got a couple different polls going on. Do me a favor, hit the like button while you're here. I appreciate it. We got the poll going live on Twitter as well, bull or bear poll, whether you're bullish or bearish. Again, we'll see how many people truly support this channel. We'll see how many people vote on this poll. Hit the heart button while you're on our Twitter page. Here's our link. There's the link in the chat if you want to check it out. What's up, Alan, Kyle, John, DS, Stuart, Raphael, Leo, Roy, K, FA, Varen, Marco. All right, so we got a little dip in AMD ahead of this earnings report. AMD is going to go up like anything. It's coming. It's slightly bullish, but as much as you can. Hopefully. Yeah, I mean, Stuart, 474 is not the PE ratio of AMD if you add them all together. So we did this morning. So the yearly EPS of AMD is about $3.01, right? AMD currently sitting at 117 or so, 117.40s. And so you do 117.40 divided by 3.01, and you get a PE ratio of about 39 for AMD. I don't know where the 600, 500 level is. Those are probably wrong. The platform is wrong. The trailing 12-month yearly EPS is about $3.01 on the year, and that's earnings per share, which is just a gauge on profitability. Again, the way you get the PE ratio is you divide it by the price of the stock. So it'd be about 117 divided by 3 would be the math there. And again, that's going to give you about 40, about 39. So, yeah, definitely not as high as, for whatever reason, it's showing up. Starbucks also expects earnings today at 95 cents is what they're expecting. 95 cents for Starbucks, 9.3 billion in sales. Pinterest expecting 12-cent profit per share on 695.6 million in shares. MicroStrategy, a Bitcoin play, potentially dropping their earnings also here. So, see, we get AMD dipping down some. AMD earnings are going to drop at 4 p.m. And then the actual earnings call for AMD is going to be at 5 p.m. So about an hour and a half before the earnings call, about 35 minutes or so until the actual earnings drop. Again, do me a favor, guys. Bump the like button. Looking at our poll numbers, we got about 26 votes. 65% think they're going to beat. 27% think they're going to miss. 8% think they're going to come in as expected. We got about 31 votes on Twitter already. 71% are bullish. 29% are bearish on our votes on Twitter. Appreciate the love and support, of course. Shout out to Santiago for giving me the follow. Thank you so much. So Nate Paul versus Jake Diaz. No, Jake Paul versus Nate Diaz. Honestly, I think everybody and their mom hopes Nate Diaz wins. I mean, I know I personally hope Nate Diaz hits him with a 3-punch combo and knocks him out, but that's just so unlikely. I think Nate's got a good chin, but he's a skinny dude, and Jake Paul's kind of been thick lately and probably got some power. And plus pure boxing, like Nate's best skill was his boxing, followed by his submissions. His best skill might have been his subs, but either way, I hope he wins. We'll see what happens. Yeah, I already scaled out of most of my Disney trade, to be honest. We already scaled out of most of Disney. Target's down a little bit, but we took profit on Target this morning too. We're still holding some of it. And again, this is one of those trades where like Target's EPS is pretty solid. And so I think in terms of like ratios there, despite all the drama with them, I think there might be some long-term objective value where we're at right now. But maybe I'm wrong. You know, the EPS on the last year for Target is about $3.94. I'm just going to do a quick one. $3.94. We got $2.95. Just round that up to 3. $4.50. So we got about a $5 yearly EPS for Target, and the PE ratio, like relative to the earnings that they're bringing in, is about 23. So like despite Target's big drops, that seems pretty objectively cheap for me. Again, maybe not. I don't know. We'll see. But again, I don't know. Under $100 for AMD. Yeah, AMD currently at 117s. It's been a pretty volatile year. What the heck is this? Sorry, it's supposed to be instrumentals, but somehow an instrumental. Technicals do lie, though, Baron. You know what I mean? What a statement. I mean, it's all good. It's all love here, Baron. But, like, listen, bro. You're trying to tell me you've never had, like, the perfect technical pattern just go completely the opposite way against you? Of course that happens. If technicals were that easy, everybody would be rich. Of course they lie. Technicals certainly lie. And fundamentals trump technicals well over. Like fundamentals, like when you compare two of like the same significance alerts or signals on the fundamental side versus the technical side, the fundamental side is going to influence the market far more than the technicals ever will. We could have the best technical pattern in the world, but if stock drops really bad earnings, they're going to drop. If bad news comes out for the stock, they're going to drop. If guidance comes in low, they're going to drop. And so with that, technicals certainly lie, I guess is my point there. Technicals are the one thing in the markets. Fundamentals don't really lie. Technicals, they definitely lie. How'd Tupperware end up doing? Yeah, Yell is doing great. I'm not saying you're wrong, Baron. I think the quote, technicals don't lie, is funny because, I mean, everybody that's ever traded technicals knows that sometimes they're just wildly off, It could be the best technical pattern in the world. If a fundamental catalyst comes out simultaneous to whatever the technical catalyst is, it doesn't mean anything, Yeah, so we get the report in about 30 minutes. So if it beats, it will be 150. If it misses, it'll be 80, but it won't stay in at 117, right? One way or the other, flip a coin. What? No, Jason, no. You're thinking about it, Jason, too binary of outcomes. Like it's more nuanced than that. It's not going to be, hey, I guess the point is it could do anything. If earnings were super easy to predict, everybody would be rich as well. If you could just sit around and wait for a company to report good earnings and then buy it, everybody would be rich. The reason it doesn't work like that is because sometimes the market's nonsensical is the easiest way to put it. Meaning sometimes a company will have great earnings, great EPS, great revenue, great guidance, and drop 15% from their earnings report. Sometimes a company will have terrible EPS, terrible guidance, whatever, and then run up 5-10%. And so again, earnings can be tricky. Just be careful. Understand like there's a lot of nuance with earnings that is not the easiest to analyze. So just be safe, guys. Yeah. So AMD, when we take a look at their revenue graph, so here's their revenue according to macro trends. Here is AMD. Here's their revenue graph. So again, in terms of this, here's their yearly revenue graph. So we actually had the first decline in yearly revenue over the last trailing 12-month reading. You can see the last time we showed over $6 billion in revenue was back in 2022 on a quarterly basis. This is going to be a little bit down relative to the previous reading. Again, if we look at this, so they're expecting about 4 3/4. So they are expecting about right here in terms of like where this next move on the graph is going to be for revenue for AMD. And so that is their revenue expectational numbers there. We can also look at EPS. Again, the real tell here is going to be how much does AI influence AMD? That's going to be the really interesting thing. Here's their EPS. So AMD quarterly, this is AMD, right? Yeah. So AMD quarterly, they're expecting a pretty good beat. The last time, it's been over a year since we posted anything around the numbers that we're at here. So the last earnings report quarterly, we had a loss of 9 cents per share on EPS, previous loss of 3 cents, previous gain of 4 cents. So the last quarterly numbers were back in March of 2022 that were comparable to what we're expecting today. And so it looks like AI is helping these to a certain extent. But again, it's something that like we really don't know what this is going to look like, and we just got to be careful. I just remember NVIDIA earnings. Yeah, but AMD's not NVIDIA though, in terms of volatility and momentum. To put it into perspective, right? Like AMD's volatile, don't get me wrong, but when we compare AMD to something like NVIDIA, you can kind of see the float size of AMD. AMD's got billions of shares in the float, 1.6 billion, almost 2 billion shares in the float. When you compare that to NVIDIA, NVIDIA's got 2.5 billion. So NVIDIA has twice the float that AMD does, which ultimately does mean that AMD is a little bit more volatile than NVIDIA here. In terms of market cap, NVIDIA is a 1.15 trillion company. AMD is 1.84. So NVIDIA is a company that has in the trillions of market cap. AMD is a company that has, less than 200 billion, just to go show you like the scope of size of the companies compared to each other. Again, NVIDIA is the really interesting one. AMD is the smaller company by far. But it's still very relevant to AI and like what that all means, looks like, and all that stuff. So AI is very relevant here. And again, vote of the poll. Do me a favor, hit the like button. We got 17 likes. We can do better than that. We got about 100 people here. We still got like a couple minutes before these numbers drop. But yeah, let me know what you guys think. All right, we got a decent amount of votes on Twitter already. 70% are bullish, 31% are bearish. Looking at our actual YouTube polls, 59% think they're going to beat, 29% think they're going to miss, 11% as expected. Why does forecast matter so much for earnings? The earnings could be bad, but when the forecast is good, it still responds with a green day. Because it's all about like projected guidance. Like if a company expects themselves to do well and then they do well, then that's kind of business as usual. If a company expects to do poorly but then does really well, then that's a much better sign, and that's going to cause a lot more optimism than just continued optimism that you get from having the same expectation. And so it's a little confusing the way I said it, but the point is companies put out future projections. And so if they can hit those future projections, that makes even more optimism in longevity predictions for the future if they're going as expected. And so I don't know. It's hard to explain, but banks are the ones putting out these analysts' expectations. And so if the banks are right, it gives more validity to the rest of their predictions, and like it's a big thing. I don't know about Intel. Intel is a much smaller company, much less range too, much less volatile, but it had a good day today. It's been a pretty solid day for Intel. AMD will break hearts. I don't know, guys. Hey, we still got like 20 something minutes left. Well, companies certainly can mislead in their earnings. They have to do it a really specific way. But I mean, they certainly can. A lot of companies fudge their numbers, but again, I mean, that's not really, I guess, that's something that we can all expect. All right, so we're going to put a timer up. All right, so we still got... All right, so here we got 21 minutes. Here's the SPY. So the SPY has been pretty choppy. It's ultimately a day where I'm glad I didn't get like super heavy into day trading because, again, just a choppy day. Feels exciting. Hey, that's what we do every day, man. Decent amount of votes on Twitter, so AMD's must have some attention here, to be honest. Again, do me a favor, bump those like numbers up. I'd love to hit 100 before the earnings are released. All right, so look at the SPY dip. Again, we're still watching AMD pretty closely here. Nice little uptrend for AMD currently. You can see the VWAP down there. I got to figure out how to put the 200 EMA. That really is one of my favorite indicators. PE ratio? Wait, how do I put the PE ratio up? That's a thing? PER? Ooh, please tell me I can put it on my chart. That would be really nice. Here's the moving average. Wonder how I can put it on my chart. All right, well, here's the price to earnings ratio down here. Let's look at like Apple, see if it lets us see it. Nah. So there's the VWAP. Still trying to figure out the EMA. Let me see if it lets me search this. All right, there's the EMA. All right, chat. Sorry, building some stuff here. AMD once above 120 will be in a complete bull zone. PayPal tomorrow. I don't know if I'm going to cover PayPal. So remember, right at the closing bell, we got MicroStrategy. That'll be interesting. Bad advice, looking for AMD to have an NVIDIA type run at some point. I'm not looking for that. I think AMD follows NVIDIA, not the other way around. Now, NVIDIA might have some sympathy with AMD and move some to a certain extent from it, but it's not going to be like immediate. It's not going to be it's not going to be as big of a market mover as opposed to like NVIDIA. NVIDIA moves markets. AMD might as well, but it's not going to be like NVIDIA. At least I don't think so. All right, AMD pulling back, still in that upward trend though. Verlander back to the Astros. I mean, that's cool if he does. I'm not the biggest fan of Verlander coming back to the team. I love Verlander. He's great. But he's old, man. Hopefully we didn't pay too much for him. Yeah, so Starbucks drops their number. Starbucks currently sitting at 101.19. They're expecting 95-cent profit per share on $9.3 billion in sales. That's pretty good average for PayPal, I think, right? Yeah, that's pretty good average. Problem is, PayPal's run over the last couple months has been huge. You know what I mean? Just a huge run. You can see the SPY down here too. Again, MicroStrategy, which is like a Bitcoin related stock. Where's Bitcoin right now? Bitcoin back up to 29.5 basically. Had a nice little run back up today. MicroStrategy earnings might be relevant to crypto right now. I don't know how relevant, but it might be somewhat relevant to crypto. Oh crap, dude. Almost sold today. PayPal will be turbulent until 89. Yeah, I think there's risks just based off of how much PayPal's up right now. Pinterest as well. Again, Pinterest is interesting. I don't really trust Pinterest. It's not I don't know the website that much regarding Pinterest. Like, I don't know enough about Pinterest. I've never used Pinterest. I still don't really know what it does. And so to me, it seems like a poster board, online poster board. That's all it looks like. And I guess that's the point where you're supposed to pin different things. But to me, it's too confusing. I'm not crafty enough to really care about it that much. But I've watched the stock. It's something that's up a little bit on the year. I mean, it's not badly up on the year. It's gone from about $19 to about $28. So realistically, this thing's up like 50% on the year. So a pretty big percentage gain on the year for so far. But again, not really a stock that I know well enough to be like super interested in putting a lot of money into, if that makes sense. I typically like to stick with things that I know and understand, and I just don't know. I don't know this company like that. Pinterest have Amazon integration. It should beat. Yeah, Pinterest is expecting 12-cent profit per share on $695.64 million in sales revenue. So, charge point, Philip. I don't know enough about ChargePoint either, if I'm being honest. And it's had a red year, and that's again, I don't know what ChargePoint does. Let me see. I want to say it's a EV charging company, but maybe I'm wrong. That's just by the name. Okay, it's a EV charging company. It owns the largest online network of independently owned EV charging stations in 14 countries. So I think as EV grows, ChargePoint will too, but it's had a bad year. And it's not a large enough cap stock. What's the cap of ChargePoint? Let me see. Market cap is $3 billion. So it's, it's not a small company really, but it's not a super large company either. It's a medium cap stock and it's down on the year. And so I just don't know enough about it to really say yes or no. When we look at their previous earnings, they've had a bad few years to ChargePoint specifically. When we look at their previous earnings, they're losing money every quarter. They haven't had a profitable quarter ever. And so that makes me nervous. I'm just not going to invest in it. But it's interesting. We'll watch it. Do they drop today or no? Space. Virgin Galactic also dropping today. Again, I've been telling people for years, space is an incredibly expensive industry, and I'm not going to put any money in a up-and-coming stock in that industry, especially one by the Virgin Mobile CEO guy. I'm just not putting money in this. And again, I've watched it drop. They had a lot of people that were interested. This one had a huge fan base, and it's dropped from like $30 down to $4. Just not really my style of trade. But it drops earnings today. They are expecting 51-cent loss, still not showing profit on 2.69 million in sales. MicroStrategy, again, expecting about 124 million in revenue. Pinterest expecting about 700 million in revenue. StarBucks expecting almost 10 billion in revenue. AMD expecting 4.74 billion. So SPY started to move up a little bit closer to the bell. All right. Sorry, my wife called. We still got 9 minutes, guys. 9 minutes. Their margins are terrible and a lot of competition. Yeah, exactly. I would think that like Tesla and other native EV brands are going to produce their own chargers to where ChargePoint's going to kind of be an off-brand. Again, I just don't have that much faith. I have faith in the sector, but I don't know about ChargePoint. Again, I might be wrong. I don't know. It's just not something like I need a sure thing when I put money into it, and not a sure thing, but I need as close of a sure thing as I can, and I just don't think ChargePoint's one of them. What do you think about AMD earnings? I mean, I hope AMD does well. Again, I'm hoping they do great. I don't know. Again, here's AMD at 117.50. Here's the SPY dipping down a little bit. Space could squeeze. Yeah, but I mean, honestly, like retail traders get talked into holding crap under one premise all the time. What if it squeezes? You know how rare a crazy parabolic short squeeze is? You know how rare that is? I'm not saying it's not going to happen for, space. But, like, again, companies are talking retail traders into holding dog crap because of squeeze potential. It's like, bro, put money on obvious, like, good expectations. Don't put money on squeeze. Like, again, look at AMC as a great example. Again, if they come up with all these conspiracy theories to avoid admitting they were wrong about it, but again, look at AMC. Same concept. Everybody's dropping. AMC's down huge percentages over the last few years, yet retail continues to hold it, continues to support it because they think they're in some type of moral fight, moral battle. And, again, retail gets talked into holding crap just because of a squeeze potential or some type of moral fight that they're in. In the end, I don't care about any of that stuff. I'm just trying to make money. That's what everybody's doing in the stock market. AMD earnings drop in about 7 minutes. Actually, AMD's scheduled to drop at 4:15 to be specific, honestly. So 4:15 is when they're technically scheduled to drop, but hey, good luck, drone. ChargePoint will be a very, very good buy and hold, never to be seen again. Yeah, but I mean, to be honest, Varen, it just sounds like you're pushing holdings of yours, and you might be, and it's all good if you are. I push my holdings too. I think everybody kind of does, but again, one of the things that I dislike when I hear from anybody else is definitive answers. Somebody saying this is going to go up for sure, don't sell, this is going to go up, or I don't like definitive statements. I think nobody knows. Yeah, I saw that I like turtles guy. I did see that. When do you think Tesla will break 255? I don't know. Upstart did have a nice rip today. Upstart went up. There's a lot of puns there, I don't know enough about Upstart to really say whether it's a good company or not. I'm looking at it on the year. It's had a really good year, to be honest, man. Honestly, what a crazy freaking year, bro. Wow, dude. Upstart honestly really has low-key had one of the best years I've seen in any stock in a long time. It's up like what? It's got to be up like 600% right now on the year. Yeah, you heard that right. Upstart is up like 600% this year. Look at this. Look at, here's a daily chart. It's gone from $12, $11, $10 to 70s. That's a crazy move. Apple breaking down. Apple just broke down under 195.80s. I want to take my vote back. PayPal drops their earnings tomorrow afternoon at like 4 p.m. Yeah, it's going to be at technically 4:25 is the scheduled time. But yeah, that's what they got scheduled. All good, Damien. All right, again, guys, we have tomorrow or after the closing bell today, we got a couple. Tomorrow we got CVS, we got non-farm employment change, but again, AMD dropping at 4:15. Devon Energy, I don't know that company, drops at 4:05. Starbucks at 4:05. Pinterest at 4:05. MicroStrategy right at 4 p.m. on the dot. So we're going to pay attention to that one. Virgin Galactic Space 4:10. Caesars at 4. And a couple other ones. But again, the big ones are AMD, Starbucks, Pinterest, MicroStrategy, and that's it. Those are the big 4 or 5 right there. So AMD scheduled for 4:15 technically, but honestly they could release anytime. Ultimately, after the close, it's never. Sometimes they follow schedule, sometimes they don't. So all we know is they're going to drop probably sometime after the closing bell. And again, we do have about 3 minutes left, guys. 3 minutes. Here's the SPY. Again, Upstart at 72.05. Yeah, we're going to cover them for sure, Jason. Yeah, we're going to stream all that for sure. Again, 3 minutes until the closing bell, and right at 4 p.m. on the dot, we got MicroStrategy dropping theirs, and then we got a bunch of other ones too. Y'all remind me to switch my headphones out before the actual AMD earnings call, please. Is Carvana still moving, man? Again, I made money on Carvana from like the 3s to the like 20s, but I haven't messed with it since it broke 20. It's still at like $50 a share though, which is still crazy. But I haven't been messing with Carvana. Yeah, it's a competitor to NVIDIA. It's also in the same sector, though, so they might have some sympathy there. Like, NVIDIA might move a little bit from AMD. We don't know how much, but there might be some sympathy there. And again, NVIDIA has been on a tear over this year for sure. So, might be relevant for all that stuff. I don't really know what AMD is going to do. I don't really have any predictions. I'm not one that tries to predict what they're going to show. I'd rather just react to it and cover it. But so far on our votes, we asked the chat, will AMD beat or miss? 68% said beat out of hundreds of votes. 22% said miss, and 9% said as expected. And again, that's out of about 250 votes or so. Vote on the poll. It's right above the chat if you can see it. You can also check out our Twitter page. And again, if you want to follow us on Twitter at Beginner Trades, we got a nice poll there. We'll see how many people really support the channel. Go give me a follow on our Twitter page. Again, on our Twitter poll. We got about 100 votes on Twitter, a little bit less. 69% say bull, 31% say bear on Twitter. So about AMD earnings. Again, AMD's had a pretty volatile year. If we look at this like on a daily chart, it's a pretty volatile year, man. We started the year off 52 weeks ago at about 134s. we dropped all the way down to basically $50 a share. Basically $50 a share from $50 at in December of 2022 all the way up to $117, less than a year later in August of 23. So big run for AMD this year. Microchips and just AI stocks in general have had a crazy run, a crazy year, crazy momentum. And yeah, we'll see what happens, but it should be fun. Again, we got 30 seconds, guys. Make sure you hit the live button next to the play button to make sure you're fully caught up on the stream. Again, make sure you hit the live button next to the play button to make sure you're fully caught up. It should look like this. It should say live right here because we're about to have MicroStrategy earnings drop. That way there's no delay. You're fully caught up on stream. Again, here goes MicroStrategy numbers. Let's pull MicroStrategy up. We're going to put it up on the left side. MicroStrategy short term. Again, here's MicroStrategy at 435s. All right, there's the closing bell. Again, we're looking at MicroStrategy now to see if they report. No volatility yet. There's the closing bell, though. Still supposed to have about 15 minutes. All right, there's MicroStrategy. Here's AMD. Again, we got the close. Still watching MicroStrategy for volatility. Nothing really yet, so it doesn't look like they're out with their numbers. Got a little pop on AMD after the closing bell. All right, there's MicroStrategy with a big drop all the way down to 428. So look at that drop for MicroStrategy. MSTR is out. They posted second quarter EPS of 152 versus 72 expected. Way better than expected for MicroStrategy. Way better than expected on EPS, at least from what I'm showing here. Again, MicroStrategy showed second quarter EPS of 152 versus 72 cent expected. Revenue of 120.4 million. Expected 124, so less than expected revenue at 120 versus expectations of 124 million expected. Basically, EPS came in way better than expected, over 100% better than expected. They expected 72, they showed $1.52. So surprised that, like, again, EPS is more like margins and profitability. So it's very surprising that, MicroStrategy's down on this report, to be honest. But yeah. MicroStrategy down to 419s right now, all the way down to 419s on this gap. Again, we're watching AMD. They're not out with theirs. The rest of them should drop sometime between now and yeah, we'll put the MicroStrategy numbers on the screen. But yeah, surprised that they're not bullish from this. I mean, they did much better than expected for their EPS, which is profitability. Vertex Pharmaceuticals dropped their numbers. We're going to put that up on the chat as well if you want to see it. Micro had mixed earnings. Their EPS, so their profitability was much higher than expected. Their sales came in much lower than expected. Again, MicroStrategy, here's their numbers right here. Just, again, way better than expected. Still watching AMD. No movement there yet, so their earnings aren't out yet. You can see the MicroStrategy numbers right here. Again, they showed 235, beat the 71 estimate. Sales of 120, missed the 126 estimates for MicroStrategy. So, yeah, again, much better than expected EPS. Way bigger than expected in terms of EPS gauges. Worse than expected revenue, though. That's probably why they're down. Starbucks is starting to move up a little bit. Let's see if they're out yet. No Starbucks numbers yet. Pinterest, no numbers yet for them. DVN, no numbers yet for them. SPCE. All right, so Lumen did drop. LUMEN dropped. We'll put this up on the screen in the chat. So Lumen's out. I don't think Unity's today, is it? Carparts.com. Yeah, Unity's not out with theirs yet. We're still looking at SBUX. We're looking at Pinterest. Nothing. Looking at AMD. Nothing. Looking at Space. Nothing for those. Again, AMD at 118s. I was thinking about buying MicroStrategy, but I think it's a little bit too late now. DVN. Yeah, DVN Energy's not out with theirs yet. I'm going to throw this in sub-only mode. So if you haven't already subscribed, guys, we definitely appreciate it. While you're waiting, if you haven't checked out Top Step is a funded program for futures where they give you a demo and they test your skill in day trading. In the futures market, there's no PDT rule. You can day trade short futures, and you can day trade the S&P 500 and what's called the E-mini. You can day trade the NASDAQ. You can day trade currencies, gold, silver, and there's no PDT restrictions. And the patterns are very similar to something like day trading Apple or day trading Google. But again, there's no PDT restrictions. And these funded account programs limit your risk, where you have limited risk. The base combine's $49. They give you a demo. And if you can hit their targets while following their rules, they fund you between 50K up to 150K with a 90% split. They're regulated. Once you're funded, if you get a live funded account, you're regulated by the CME, and they pay out millions, fund thousands a year. They've been around for over a decade. Great sponsor of mine. If you want to check them out, here's the link. I'm definitely biased though. StarBucks is out with their numbers here. So here's Starbucks. They're breaking down big, down under $100 for Starbucks. Again, I'm going to put the here's the Top Step link if you want to check it out in the description. Again, they are a sponsor. I'm biased in their favor. Look at Starbucks down to 99.40s right now, 99.40s. So Starbucks came in with their numbers. I'm still waiting to see. MicroStrategy posted theirs as well. Starbucks posted GAAP EPS of 99 cents, non-GAAP EPS of $1. They expected 95, so better than expected for EPS. Sales of 9.17 billion. We'll put these numbers up as well. There's the link. Check it out. Starbucks down though, down on the day. And again, I'm using a platform called Moomoo. And again, I use Moomoo for like a lot of this different stuff, to be honest. So I use Moomoo for a lot of this different stuff. If you look at it, there's just so many ways that I can use it that help my trading. Like if you look at this, I can see like strategies, head and shoulders in the market, arc tops, horn tops, bearish flags. All right, so again, we still got a couple minutes before AMD numbers are out. AMD's not moving. But again, I can see all these different patterns. I can go to hotspots, see what sectors are performing, what's moving in pre-market, what's moving in after hours, IPOs, all that good stuff. I can look at a heat map to see what's moving. Their Paperfolio section allows me to see what traders are, how much traders are up, see what their portfolio looks like, and follow them if I want to mimic their trades. Their news section is one of the best in the game. And people always ask me, like, how do I find these economic releases? I can go to calendar, I can go to earnings, and I can go to all earnings and see what's moving in the markets and see what big ones dropped today. I can go to economic data, look at 3-star in the US, like big data, see what's there. And zero commission stock trades. They're open the entire time of pre-market, which is why I moved over from TOS. And if you deposit $100, if you open an account and deposit 100, at least you get 5 free stocks. You deposit over 1,000, you get 15 free stocks. You deposit over 5K, you get 15 plus a free share of Google or Tesla. And I did get Tesla. So check them out. Great platform. They're a sponsor of mine as well. Again, we're waiting for AMD to drop their numbers here. Still hanging out, waiting. We'll pin this to the top of the chat. And did Pinterest drop theirs? Yeah, I'm looking for numbers. I don't see much. VF dropped theirs. We'll put this number up in chat as well. VF, which is VFC Corporation. There's the link. There is the EPS for that. We're still looking at Starbucks sales. Pinterest is out finally. They posted 21-cent EPS, beat the 12-cent estimates. Oh, you're right. This is Q2. My bad. Yeah, you were actually correct. Thank you, sir. Would have missed that. I appreciate it. Again, Starbucks down a lot, but starting to bounce back a little bit. Still waiting on AMD. Again, Starbucks showed monthly active Pinterest users is at 465 million, up 8%. EPS 21 cents. Again, Starbucks. Third quarter comparable store sales up 10%, up 7% North America, 24% international. Quarter three operating margin 21.7%, 21.7% there. Again, still waiting for AMD. Anything else I missed? We got MicroStrategy, Pinterest, Starbucks, DVN is the other one maybe. DVN is out. I'll have to find theirs. Space. Space did drop. They posted a second quarter loss per share of 46 cents. They expected 51, so a little bit better than expected there. Second quarter loss of 134.4 million. So Space out, a little bit smaller loss than expected. There's AMD dropping here, guys. So AMD's dropping right now. So AMD numbers might be out. They're dropping big as we speak for AMD. Down to 115.70s here, 115.70s. It looks like their numbers are out. To 115.70s. Again, still waiting on the AMD numbers to drop. Starbucks out. AMD at 116s. All right, AMD back up to almost 116s. EA dropped their numbers. Electronic Arts. I didn't realize they dropped their numbers today. Again, I can't find the EPS numbers here. I'm looking for them. Yeah, I'm on the AMD site, but EA beat. Yeah, I think their earnings are dropping in about 12 minutes. I'm not sure. In about 4 minutes. I'm not sure why they dropped. There's EA, though. So you can see EA numbers right there. Starbucks down a little bit. AMD at 115s right now, 115s. We got about 3 minutes before they drop as well. Yeah, I don't know why AMD's down. I don't see any news on it. I'm on their website too. I don't see it. All right, still consolidating here at 115.90. Starbucks is basically bouncing back. Here's MicroStrategy. Also looking like NVIDIA to see how this one's moving to all of this as well. NVIDIA's down there. Yeah, it could be EA. Caesars Entertainment dropped there, so Caesars out 426 EPS. They expected. Caesars actually did much better than expected. I'm using a platform called Mumu, Liam. It's a zero commission platform. You get up to 16 free stocks. You can check out the link pinned at the top of the chat if you want to check it out. Again, we're scheduled technically to drop these numbers at 4:15 market time, so that's in about a minute and a half, guys. About a minute and a half. Starbucks back over $100. Yeah, MicroStrategy. 235 EPS. MicroStrategy is a little bit more interesting. It's kind of like it didn't look. There's MicroStrategy numbers right there. It did great on EPS. Did terrible on revenue. Yeah, it's not out yet. It's supposed to drop at 4:15. We got about a minute left. AMD bounced it all the way back to 117's pre-earnings report, guys. All the way back to 117.30s here. 117.30s, 117.50s for AMD. So AMD's starting to run out. Again, 30 seconds, guys. 30 seconds. AMD fighting. 118.10s now, guys. 118.10s. All right, so there is we got 7 seconds left. 7 seconds. Sorry, somebody's knocking on my door. All right, so there's the release. Let's see if AMD numbers drop. All right, so it doesn't look like AMD numbers are out yet. It's at 118.70s, 118.70s. Sorry, my dogs are barking. All right, AMD at 119 right now, right under 119. Sorry, I think it was just the Amazon guy, but man, my dogs are just, they're not having it today. All right, there's a pop up to 120s on AMD, 120.30s, 121s. So it looks like their numbers are actually out now for AMD. So AMD did release their numbers. AMD ended up showing revenue for the second quarter of $5.4 billion. $5.4 billion for revenue at $4.74 billion expected, so much better than expected. Revenue EPS came in at 58 cents, better than the 57-cent estimates for AMD. We're going to put the numbers up on chat. So they did beat on both metrics. There's the numbers right there in chat. You can see a big move up. Finally, the numbers dropped, and AMD is ripping up. It's at 122s right now for AMD. 122s and a big move. Beat on both metrics. So again, we told you it was 4:15 is when it was scheduled to release, and that's exactly when it came out, was right at 4:15 on the dot. And so yeah, AMD, it's poised to rip up more. Look, there's 124s for AMD flying up right now. Let's see if NVIDIA moves in sympathy to this. So NVIDIA ripping up as well in sympathy to this for AMD at 125s, currently 125. So a huge move now. All right, let me exit this out of the way. NVIDIA flying up, AMD pulling back. Is AMD a dip buy right now, guys? Again, I'm going to end this poll now. We got about 800 votes or so. And we're going to do another poll. Does AMD close over through 127 today? Yes or no? Does AMD close over 127 today? Put on the poll. Let me know what you guys think. We are going to stream the entire earnings call, guys. Again, if you haven't already subscribed, we cover all this stuff every single weekday right here on YouTube for free. We don't charge a penny for any of it. We don't sell a course. We don't even claim to be good traders. We just report free data like AMD today. We're going to stream the entire earnings call live right at 5 p.m. on the dot. But again, we're going to put the AMD numbers up again. AMD beat on both metrics here, beat on both metrics. Quarter 3 23 revenue was at 5.7 billion plus or minus 300 million versus 5.82 billion expected. So their guidance came in a little bit light. I'll post this number right here so you can see what I mean. But again, AMD's guidance came in a little bit light. Gross margin was 50% down from 54% year over year. We're putting the numbers up in chat if you guys want to, peep them out. Non-GAAP gross margin came in at 51%. Second quarter gaming revenue of AMD came in at 1.58 billion versus the consensus estimate of 1.62. So second quarter gaming revenue came in a little bit light. Embedded revenue came in at 1.46 billion versus 1.48 billion expected. And so again, their guidance numbers came in a little bit light, but so far they're green from this report. Again, you can vote on that poll. Let me know how you feel. Yeah, we got a decent amount of votes on Twitter as well. Vote on Twitter. Let me know if you're bullish or bearish. And again, if you haven't given me a follow on Twitter, again, completely free Twitter account. Help me grow that Twitter page. We're growing that now. Again, also check out our sponsors, Top Step funded program. If you want to day trade, you can see we're already funded in one of our accounts, but we had a losing day. And so we ended up just pivoting to one of the other accounts that we're trying to get funded in, because you can have multiple funded accounts. And the patterns are very similar to something like stocks, like day trading futures. You can day trade the S&P, the NASDAQ currencies, and there's no PDT rule. So you can day trade as much as you want. And Top Step's the most legit funded program in the world. Listen, and most day traders lose money. Most new day traders are going to lose money. Top Step makes it very cheap and lets you learn how to trade where you still have pressure to succeed. So you still have to learn how to trade under pressure, but there's less risk. The base combine on Top Step's $49. If you pass that challenge, you get $50K in funding. If you don't pass it, you're only down $50 basically. Again, you can day trade short, buy market, buy bid, sell the ash, just like stocks. You can day trade the S&P, the NASDAQ, but there's no PDT rule. And again, if you pass their test, and their test is hard to pass, not everybody's going to pass it. I think most people will fail because most day traders lose, but it's a lot cheaper to lose this than put up the money yourself. And in that regard, I think it's a good option if you're trying to learn day trading. But again, I'm very biased in their favor because they pay me money. You know, they're a sponsor of mine. So, but if you want to check them out, here is the link. Great way to help support the channel as well. Their guidance numbers are mostly out. Their guidance numbers came in a little bit light, but you can see we're pulling back to the volume weighted average price, which is a very relevant kind of milestone level. And so you can kind of see that milestone level right here. We pulled back to it. Now we're bouncing off of it a little bit. We'll see if we hold. What do I mean by light? I mean, they came in under expected numbers for guidance, and that's probably causing the pullback that we're currently in. If you look at their guidance numbers, anytime you see C's, when you're reading these financial reports, anytime you see C's, that means guidance. And so again, for the third quarter, second quarter, for the third quarter of 2023 guidance for revenue, they are expecting 5.7 billion for guidance, which is plus or minus 300 million. But when you compare that to what they were originally expecting or estimating, which was 5.82 billion, we came in about 120 million under expectations there. So again, their 2023 quarter three revenue guidance came in a little bit under estimates, and again, you can kind of see that written here on the statement. I'm just trying to explain to you guys what this means so you guys can interpret these financial reports. Again, whenever you see AMD C's, that's guidance. That's future projections, right? And now they might have previous projections for those numbers, and one of the influencing factors of earnings is if their previous guidance lines up with what they're now expecting this quarter, which is what you see here. So again, they came in a little bit under that. That's typically a bad thing. But again, AMD holding, their EPS came in better than expected. Their revenue came in better than expected. Some other stuff came in light, but it hasn't been disastrous enough to cause any big significant drops. And AMD is still up pretty nicely from their report, up to 122 right now. So, hey, nice, Dylan. It's a good trade, man. Yeah, I don't know if AMD is going to go back up or not. I mean, I hope it does, but I don't know. So again, AMD's second quarter data center revenue came in at 1.32 billion versus Visible Alpha consensus estimate of 1.38 billion. So a little bit lighter second quarter data center revenue as well. Client revenue came in at 998 million versus 839.5 million estimate. So client revenue came in much higher than expected relative to, second quarter data center revenue or gaming revenue for the second quarter. Technicals don't lie. These are fundamentals, Varen. So again, Earnings are fundamentals, brother. Technicals would be like if you had a triangle pattern on the stock and then it broke out. That would be technicals. Fundamentals are financials, man. And, AMD doing better than expected on EPS and sales and then going up from that would be a fundamental reaction, sir. And it's all love here, bro. It's all love, but I'm just saying that's fundamental. 127 seems impossible today. 127 is right there. I mean, that's very possible, especially with the earnings call. I'm not saying it's going to hit that, but AMD's call is in 5 minutes. 5 minutes for AMD. Again, full call stream 5 p.m. Eastern time. Y'all do me a favor, hit the subscribe button. Not John, I read only diversions. It's U-turn to U-turn, no other patterns. I understand, Varen. And again, I'm going to preface what I'm about to say with it's all love. But you can't watch a second quarter earnings, which is a fundamental release, right? And then watch AMD have a bullish reaction to that fundamental release and then say, hey, the reason AMD's up is not from the fundamental release, but instead because of this obscure technical pattern that I watch. Again, you could say that. That's fine. But come on, bro. But again, it's all love, man. We can agree to disagree if you want. It's all good, bro. I appreciate you engaging with my content, sir, and participating in the chat. So it's all good, bro. Again, StarBucks still at 101s. Yeah, they just need to say AI as much as they can on the call. If I was them, that's what I would do. I would just spam AI on the call and see if the market goes up and see if the stock goes up. Yeah, I mean, it could touch 127. I'm not saying it holds, but the poll is about whether it holds or not. And again, y'all can vote on the poll. Let me know what you think there. Elon Musk says, unless there are a few issues where you at least slightly disagree with your political party, then you are not in a political party, you're in a cult. Yeah, I mean, I disagree with Elon in a lot of ways, and I'm very neutral politically. I'm not political at all. I dislike both sides, and I guess that leads me to have this viewpoint. One of the things I've always said is, if you believe 100% with your political party, if you agree with everything they say, you are either desperate to fit in or just not very smart, not a very smart person. But again, that's with both sides. It's certainly not just with the left. That's definitely with the right as well. It's both sides. I dislike them both equally. But yeah. Who do you have? Nate Diaz versus Jake Paul. Who do you got? I'm going to go with Jake Paul. I hope I'm wrong. I hope Nate Diaz knocks him out. There's an AMD pumping up to 124.50s. 124.50s. High of the day is right around 125.40. So we still got a little bit of time there. Hey, thank you, USA Soccer. Yeah, we try to be nice. It's all good. Most people are cool, I have a few pet peeves, and again, I'm not perfect, so it's all good. Again, StarBucks at 100.7. AMD still moving up. NVIDIA pushing up with it. You can kind of see the similarity in trend. Both microchip stocks. Here is NVIDIA, which is, again, about twice the size of AMD. If you go by market cap, it's actually much larger than that. But here's NVIDIA, which realistically is about 5 times the size of AMD in terms of market cap. I think their market cap's over $1 trillion. AMD's got about $200 billion, maybe less than that. But again, you can kind of see the pattern. Now we'll see if this holds. Both related competitors to a certain extent, but strength in microchips is good for both of them. So yeah, no, the results are out already, Don. Don, you might be delayed on the stream. Make sure you hit the live button next to the play button to make sure you're fully caught up, brother. Again, the reason I'm saying that is because sometimes we get people that come in late and they're listening to conversations we had 30 minutes ago. You want to make sure your live button says or you want to make sure your live button looks like this and is red. That way you know there's no delay is what it is. But yeah, AMD numbers, if you are caught up on the stream, are right here, bro. Why does AMD's PE say 653? I'm not sure. When you calculate the PE ratio, I could look at this updated PE ratio as well. And I think I'm going to do that now. So let's go ahead and look at their updated PE ratio. So they ended up showing up today at 58 cent EPS, 58 cents, higher than expected. So when you correlate this with their price per share, PE ratio is price to earnings. So let's add it. 58 plus 60 plus 69 plus 67 gives us, wait, did I miss one? I think I had to. Hold on. 58, hold on, wait. 58 plus 0.60 plus, I don't even know if I need to put the 0.69 plus 0.67. 254 EPS. So yeah, 254 EPS. Now, I think their PE ratio is going to be a little bit higher now. So 254 EPS. When you take the current price of AMD, wait, there we go. Their PE ratio currently is about 48, about 49, which is not really good, but it's not as bad as like some websites are showing like 600. The PE ratio is a little bit under 50 right now, so it's not 600. It's a little bit under 50. And again, the way you calculate that is the trailing 12-month PE ratio, at least, is you add up the last 4 quarters, or you take the yearly EPS value, which in this case will be $2.54 earnings per share, which is again, EPS is profitability gauge. It's a gauge on profitability, but you take that, you add them together, you get the yearly EPS value, and then you take the price, divide it by that number, and that's the PE ratio. In terms of PE, what's considered good or like properly valued is around 30 right now, I would say. It varies. Conventionally 15 is good, but right now with a lot of inflation and prices are inflated in stocks as well, the good PE ratio right now, I would say for me that I would consider value in buying is like 20 to 30. So in terms of PE specifically and only, it's a little bit high, but again, I think there's also other nuances of it that you want to pay attention to, like strength in microchips and the growth of AI and what that means for the forefronting companies in that sector, which is AMD, Nvidia, Intel, and a few other ones. So that's something to consider as well when you're valuing these companies in terms of investments. And yeah, again, let me know where you think AMD will be next year. The call is at 5 p.m. Again, 5 p.m. We'll put a timer up so you guys can catch it. But again, the call is in about 30 minutes. All right, so here's the timer for when the call starts. Again, at 28 minutes or so. AMD dipping down a little bit, but how would you fairly value negative PE in companies that are in growth mode? Like CrowdStrike. I don't know if you're going to be able to use, like, you could look at PE ratio and stuff like that, but like for companies that are in growth mode, I would look at it like this, right? I would take whatever company it is and I would type in, like, I'm just going to use AMD EPS graph, so I would just look at it like this, and then I would look at their graph and try to get a real tell on what their earnings like looks like. And so if we get something where, their EPS is looking like this, but it's starting to thin out a little bit and maybe turn profitable, you know what I mean? That's when you might have some arguments for a buy, but they're so much more speculative than companies that are already producing numbers. And, it really is something that you just got to be careful with companies that aren't profitable. I think traders lose more money on mid caps than they do on a lot of other sectors, because mid caps can get really hyped up, and a lot of traders treat them like they're blue chips in terms of like spending money on investments with them. But a lot of them can and will drop 50, 60, 70% in a year. And so if you got a company that's not really producing income yet, just be careful with it. I wouldn't go super overboard with it, regardless of how much you believe in it. And it's really interesting story. So like back in the day, the standard of IPOs, like a company would never go public if they weren't actually profitable. You know what I mean? Like if their EPS wasn't positive, if they weren't profitable, a company, back in the 50s, 60s, 70s, 80s, companies would never go public if they weren't profitable. That mostly changed when a company called Netscape, which was the first browser company. So like if you're old enough to remember Internet Explorer, before that you had these subscription browser services that would like connect you to these different websites when the internet was in its infancy. Well, they went public in their IPO before they were actually profitable, against a lot of analysts' warnings, and they were wildly successful from their IPO. They ended up making so much money from their IPO. It kind of changed the standard of offerings for companies, where after that, companies were much more commonly going public before they were actually profitable or not. And so we can thank Netscape for that. They ended up dying because Microsoft wanted to partner with them. They didn't want to partner with Microsoft. And so what Microsoft ended up doing was just started including a free version of their browser software, Internet Explorer, with all the computers that had Microsoft operating systems. And so essentially overnight, Netscape disappeared. It ended up getting bought out by American Online a couple years later for much less than it IPO'd. So yeah, don't mess with Microsoft is the story there. But I use TopStep for futures trading, which is a funded program for futures. Again, for stocks, I use the platform Moomoo. People always ask me where I get my data. This is one of the places. I like specifying 3 stars, which are like biggest economic releases in North America. So you can see today we had JOLTS and PMI data. Tomorrow we got the non-farm employment change, crude oil inventories. Thursday we got services PMI and non-manufacturing PMI, as well as jobless claims. And then Friday we got non-farm payrolls and unemployment. You can also do the same thing for earnings here. And again, they got this really cool thing where you can explore, look at heat maps, pre-markets. You can build a really nice screener here where I was looking for companies with low PE ratios. Honeywell is some of them. And there's just a lot of different things. You build strategies. You can, they have free unusual option activity. If you go to options, you can follow different traders on Paperfolio. News Source is one of the best in the games. Again, they have the calendar. You can look at different headlines to see what's going on. And again, if you open up an account and deposit at least $100, they give you 5 free stocks. Over $1,000 deposit, you get 15 free stocks. And I got like Palantir and some other ones. And then if you deposit over 5K and open up an account and deposit over 5K, they'll give you the previous 15 plus Google or Tesla. I did get Tesla, so pumped about that. But if you want to check it out, it's called Moomoo. It's a stock trading platform, 0 commission stock trades, open the entire time of pre-market, which is, again, I used to trade on TOS a lot. I ended up switching to Moomoo because I can actually trade when I start the stream, which is very useful. Yeah, everyone can get an IPO. You push a semi-truck down a hill and sell revolutionary. Yeah, Nikola, NKLA is the symbol for them. I remember when that happened. I'm surprised they're still around, in all honesty, because that was like a big scandal. And they're actually, speaking of them, I think they have earnings on Friday. They went crazy over the last few days. Maybe it's not Friday. When are the NKLA earnings? Is it Thursday? Are they already out with theirs? Maybe I missed it. They dropped theirs Friday. Okay, so yeah, I was right. You can trade aftermarket on Moomoo. It's open the entire time of pre-market and after hours. What's your strategy on finding undervalued stocks? I mean, my strategy is kind of a mix between swing trading and value investing is really what it is. Like, it's a little bit in between there, where I look for what I would consider healthy blue chip companies with low PE ratios, and I wait for them to have big emotional pullback catalysts, maybe from earnings. There's a lot of reasons I'll do it. And then I usually buy those up and sit on them indefinitely until they end up coming back. And because I'm only buying blue chip healthy companies, I can usually sit on them long term if I need to, and they'll turn into value investments. Or if they go really decently in my favor short term, I'll just take profit there, or at least take half off, and kind of have like a hybrid between value investing and swing trading is what it is. Again, you can't do it with anything besides a very healthy, large blue chip company. If you try to do it with penny stocks, you're going to lose tons of money. If you try to do it with mid caps, you're going to lose tons of money. I can't even guarantee you're going to make money doing it this way, but this is just my own method of doing it, and it works for me. So Green on the year on Mumu and TOS doing it. So. Can anyone tell me why my content keeps or my orders keep getting rejected? What's your platform? If it's in after hours, you probably need to change the time and force to EXT. What's the error message it gives you, though, is really what it depends on. The average entry-level home in the U.S. has hit a record high of $243,000. Again, AMD still consolidating around 123s, around 123s. All right, so again, consolidation here. We do have a little bit of what looks like a flag pattern here as well. We got 19 minutes before the market for the AMD earnings call, but there's the flag pattern. You can see it. It's a pretty obvious one, and you can see why they call it a flag because it looks like a flag. But again, we'll see if we hold. I think the volume weighted average price on AMD is a big milestone spot. Like right here, you see this purple line. I think that line makes sense to pay attention to, but maybe not. I don't know. Let me know what you guys think. Well, AMD hold. Let me know. Looking at our poll here, out of about 700 votes, 57% say yes, 43% say no, regarding whether AMD will close over 127 today. And I guess it depends on what the earnings call shows as well. All right, guys. Again, anything else that y'all think looks cheap today? I see Starbucks started bounce back up a little bit. AMD pulling back at 122s, testing that level. NVIDIA is still showing basically the same pattern as AMD. It's really interesting because you can kind of see how they piggyback off of each other. Again, here's the pattern. Oh, that's a bad top 3 triangles in the world that was. But, man, dude, I'm not that good at this. All right, so again, you can kind of see the flag pattern for NVIDIA, and then you kind of see the same flag pattern for AMD. Very similar patterns here, both microchips. AMD has been on a heck of a run, though, man. This thing. Here's a daily chart for this one. Here's AMD's daily chart. Again, very similar. NVIDIA's obviously been much stronger than AMD, but AMD still had a pretty good year also. I mean, you can kind of zoom out and see the last few years. But again, AMC is still dipping down a little bit. I'm watching the volume weighted average price level. But what a year for AI and microchips. Again, 15 minutes here, 15 minutes before the actual earnings call starts. Are the books behind you for decor? No. I mean, they're just books, man. My daughter reads them. I read them. You know, I've been reading this AI book that's pretty good. I've also been reading The Millionaire Next Door, which is all right. I mean, it's kind of common stuff for me, but yeah. I mean, we got a whole library in here. Look. You know. Yeah, that's not me. That's probably just another ad dramatic on the stream, I'm guessing. Again, we're still pulling back, still over the volume weighted average price. Starbucks still at $100. What about MicroStrategy? What did they end up doing? MicroStrategy dipped, but it's still bouncing back. Held at like 420. I feel AMD won't hold. If you think the average price of a home is high, please don't look at the average house price here in Australia. What's the housing market like in Australia? I'm a real estate agent here in Texas as well. So, like, I understand the U.S. market, but what's the Australian market like? I'm assuming by what you're saying is that it's expensive and overpriced. Is it kind of like Cali here or something like New York here? Where I live in Texas, though. So, like, the housing here is much different. Like, I could, for $1 million here, you can get a mansion basically in Texas, you know. Depending on where it was, but for $1 million, you can get a very, very nice home, 6,000 square feet, you know, really, really nice. You know, you try to get the same thing in like Cali, it's going to be like a little shack, you know, but there's pros and cons. The countdown is for when the actual earnings call starts. Yeah, property taxes get you in Texas for sure. Yeah, I paid a lot of money in property taxes, you know. Moves where? Dramatic Bull, what platform are y'all talking about, man? What orders? Top right of my screen, AA. You got to tell me the platform you're using. If you're using Trade-Evate, they had some issues with Trade-Evate, but again, you want to reach out to them. I'm not sure. I haven't had any issues with mine. It's also past the time where you're supposed to trade. You're not supposed to day trade on Top Step after 4 p.m. So it's only day trading, and it's past 4 p.m. That's probably why you're not able to trade, is because it's after the closing bell today, man. It's a day trading combine challenge, so you're not supposed to day trade right now. It's after the bell. Australia housing market is super expensive due to, yeah, 1-bedroom apartment, $600K. I would never spend $600K on an apartment ever for anything. Mostly for depreciating reasons. Like anywhere that there's apartments is going to be more likely to depreciate over time. And so spending over $500,000 on an apartment just seems like a recipe for a depreciating asset. But again, maybe I'm wrong. You never really know. We got 10 minutes, guys, 10 minutes. But again, I'm not going to buy an apartment for anything close to that. I mean, other people can. It depends on how much money you have. If you got enough money to where you just don't care, then it doesn't matter. But for me, I'm looking at stuff that's going to at least obviously appreciate, or at the very least break even. In an apartment, it's very difficult to predict what it's going to do. But yeah, just risky, I guess. I mean, I'm not saying there's not an argument for specific individual apartments that are better. I don't know. I'm just saying, in terms of my checklist on what I'm okay with investing money in, an apartment for over $500,000 is not on that checklist, But again, that's just me. That's preference. It's all good, y'all. If everybody's different. Maybe there are arguments for investments that like that. Again, I don't know. No, I'm good, Rocket. I'll pass on that, man. Yeah, condos are basically overpriced apartments. I can agree with that. Condos as well. Condos are a little bit different, but still same argument. All right, guys. AMD still at 122s. Testing VWAP. You can see we pulled back to the volume weighted average price. We're still trying to hold. We'll see if we do. Yeah, I mean, originally I'm a Louisianian, but I currently live in Texas. It's nice. It's all right. It's hot. I went up to Michigan. I really like Michigan, to be honest. Michigan was really nice. So I was thinking about buying an investment property out there. It'd just be hard to manage since we live so far away. I'm in the Houston area. All right, guys. Hey, we got 7 minutes left or so. Pinterest hiking up. Yeah, I know Pinterest ripped. Or no. Yeah. Pinterest finally bouncing back. Yeah, look at Pinterest here. So had a red reaction initially from earnings, and then now it's kind of fighting all the way back, coming right back up. So look at the big drop we got on Pinterest, and then now we're basically rebounding all the way back up. Yeah, Thursday. So tomorrow earnings are going to be the big ones, man. Yeah, we're gonna go ahead and ban the guy that's asking me to bring my daughter on the show. What a weird comment. Yeah, it's hot. I mean, I'm not saying it's not hot here. It's definitely hot. $49 is a loan origination fee? No, man, it's not anything like that. I mean, again, it's a challenge. So I mean, they're gonna make money on the challenge whether whether you pass it or not. And I think I understand that. That's fine. Top Step, they give you it's $49 to participate in the challenge. If you can pass the challenge, they fund you with a 90% split. Once you're funded, there is a max loss that you can't hit. If you hit the max loss, you're not funded anymore. So I mean, they're gonna protect themselves and they're not just gonna let you YOLO the account. Yeah, it was very strange. I didn't want to say anything. Yeah, we got some weirdos, man. We got weirdos. Again, there's some people I know personally that some of the comments just give me the vibe of people I know personally sometimes. Um, I got one guy I know that lives in Florida that talks that basically he's just struggled all his life. Some of these guys talk exactly like him. We got another one that I know live in Louisiana. Another one I know that lives in Vegas. Got another one I know that lives here. That you know, that we brought on the show once before and then got weirdness from. And so, again, yeah, I don't know, man. We got weirdos in the chat. It's something that I probably should have a little bit more thick skin from, but just strange. People are weird, man. Anyways, look at Pinterest. Again, I don't really understand the business model of Pinterest, so I can't really say whether it's good or not. You think Apple's going to beat earnings? I'm not sure. What I'm kind of frustrated with is I wish they wouldn't schedule AMD and Amazon earnings same day. Yeah, that's a terrible idea. I wish they would separate the days and have Amazon earnings one day, Apple earnings another. Yeah, very strange. Pinterest is all ad revenue. Yeah, I don't know. I don't know how Pinterest makes money like that. I really don't. Any swing trading books you recommend? No, not really. I don't think trading books are necessarily useful. Technical books, at least. I don't think learning technical patterns in book form is really going to be easy or useful. If you're going to learn technicals, learn through video content. If you're going to learn investing, you can read books on investing, sure. But swing trading and technical based strategies is just not going to be easy to learn on books. In that regard, it's a little bit of an outdated, learning vehicle. All right, guys. Hey, we got 3 minutes. 3 minutes. My brother's a cop. Yeah, I mean, again, what I've learned is people get weird. The weirdest people are usually people who, again, the people who are the biggest haters on the stream are typically people who have tried and failed to do what I'm doing, right? Maybe they had another channel, crypto channel, or maybe they had another business channel, failed. Then they get weird with me out of insecurity. Maybe they thought they were going to be something great. And again, most of it's just insecurity, but I got to do better at having thicker skin, I think, But again, I truly appreciate everybody here. I appreciate the love, the support. We got a bunch of great, members of the community here for sure. Pinterest slightly green. AMD did bounce at that VWAP level. Yeah, Trading in the Zone, Mark Douglas's great book. But it's more about psychology than technicals, in all honesty. It's more about psychology. So Mark Douglas, rest in peace. He was the greatest. But he passed away a long time ago. But that book's mostly about psychology over technicals, All right, so we got the earnings call on hold. We're waiting for it to start. It starts anytime now. Having thick skin doesn't mean allowing BS, though. Yeah, I mean, I try to do my best, Pinterest, rip it up. It's almost to 30. You get almost up to 30. All right, here we go. So again, y'all can hear the music, correct? I just want to make sure y'all can actually hear it. If y'all can hear it, then the earnings call will be, you'll be able to hear it. Oh, wait, let me switch my headphones out. Y'all are supposed to remind me, Chad. I'm disappointed in you guys. You're supposed to remind me about this. There we go. We still made it. We still made it in time. All right, chat. How is the audio? Y'all can hear? The music now, you should be able to hear it. Earnings call starts right now. Let me make sure it's live. Oh, sorry, guys. Hold on. There, now you should be able to hear it. All right, they're still on hold. They're still on hold, so it hasn't started yet. So we're still waiting for the actual earnings call to start, guys. So bear with me. I'm going to mute this so I can play it as soon as it starts. All right, we're here waiting. We're here waiting. Again, earnings call is about to start right now. All right, still, it sounds like they're a little bit late. Again, we got the earnings call in the background. We're waiting for it to start here. As soon as they start, let me know. Or as soon as they start, I'll let you know.
Greetings and welcome to
Sound
the
check.
AMD second quarter 2023 earnings conference call.
Let me know if you can hear
At this
this.
time, all participants are in a listen-only mode. A brief question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star 0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce to you Mitch Hawes, Head of Investor Relations. Thank you, Mitch. You may begin.
Thank you and welcome to AMD's second quarter 2023 financial results conference call. By now, you should have had the opportunity to review a copy of our earnings release and accompanying slideware. If you have not reviewed these documents, they can be found on the Investor Relations page of AMD.com. We will refer primarily to non-GAAP financial measures during this call. The full non-GAAP to GAAP reconciliations are available in today's press release and slides posted on our website. Participants on today's conference call are Dr. Lisa Su, our Chair and Chief Executive Officer, and Jean Hu, our Executive Vice President, Chief Financial Officer, and Treasurer. This is a live call and will be replayed via webcast on our website. Before we begin, I would like to note that Jean Hu will attend the Jefferies Semiconductor IT Hardware and Communications Summit on Tuesday, August 29th, and the Deutsche Bank Technology Conference on Thursday, August 31st. Dr. Lisa Su will attend the Goldman Sachs 2023 Communicopia and Technology Conference on Tuesday, September 5th. Our third quarter 2023 quiet period is expected to begin at the close of business on Friday, September 15th. Finally, today's discussion contains forward-looking statements based on current beliefs, assumptions, and expectations, speak only as of today, and as such involve risks and uncertainties that could cause actual results to differ materially from our current expectations. Please refer to the cautionary statement in our press release for more information on factors that could cause actual results to differ materially. With that, I'll hand the call over to Lisa. Lisa?
Thank you, Mitch, and good afternoon to all those listening in today. We executed well in the second quarter, launching multiple leadership products, significantly expanding our AI engagements, and ramping our latest Zen 4, EPYC, and Ryzen product families. Second quarter revenue declined 18% year over year to $5.4 billion. Sales were flat sequentially as client and data center segment growth was offset by expected declines in our gaming and embedded segments. AI customer engagements grew by more than 7 times sequentially as multiple customers initiated or expanded programs supporting future deployments of Instinct MI250 and MI300 hardware and software at scale. Looking at the second quarter business results, data center segment revenue of $1.3 billion was down 11% year over year and up 2% sequentially. Although market demand remains mixed, 4th Gen EPYC CPU adoption accelerated in the quarter, with revenue nearly doubling sequentially as cloud providers expanded deployments to power their internal infrastructure and public instance offerings. In cloud, 30 new AMD instances launched in the second quarter, with multiple Genoa instances announced by AWS, Alibaba, Microsoft, and Oracle. Genoa delivers up to 1.9 times more performance in enterprise and cloud applications, and 1.8 times more performance per watt than the competition, making it by far the industry's highest performance and most efficient server processor. As an example, AWS announced its M7A Genoa instance, which is the highest performance and best price performance general-purpose x86 instance they offer. In total, there are now more than 670 AMD-powered cloud instances publicly available, and we expect that number to grow 30% to nearly 900 by the end of the year, driven largely by new Genoa deployments. We also expanded our Zen 4 server product portfolio in the quarter with the launches of Bergamo and Genoa X. Microsoft Azure announced the first Genoa X HPC instances that offer more than 5 times higher performance in technical computing workloads compared to their prior generation. With Bergamo, we deliver more than double the performance than competitive offerings for cloud-native applications while offering full x86 software compatibility. We were excited to be joined at our launch event by Meta, where they announced plans to deploy Bergamo broadly across their global data center infrastructure to power applications including Facebook, Instagram, and WhatsApp. Looking ahead, Dell, HPE, Lenovo, Supermicro, and other large server providers are on track to begin launching their new Bergamo platforms in the third quarter. In enterprise, while macroeconomic uncertainty resulted in weaker customer demand year over year, sales of EPYC processors for enterprise servers grew sequentially as we closed multiple wins with large energy, technology, financial services, and healthcare companies. Overall, pull from large enterprises continued to grow. For example, Banco do Brasil, BNP Paribas, Petronas, Uber, and other large enterprises all adopted EPYC processors in the quarter, and SAP selected EPYC processors to power RISE with SAP applications hosted on Google Cloud. We expect EPYC revenue to grow by a double-digit percentage sequentially in the third quarter, led by the expanding 4th Gen EPYC CPU ramp. In addition, Sienna, our first EPYC processor optimized for leadership edge server and telco infrastructure, is on track to launch this quarter. Turning to our broader data center business, in networking, the largest cloud providers expanded their adoption of Pensando DPUs in the quarter, highlighted by new deployments with Alibaba and Oracle Cloud. In supercomputing, EPYC and Instinct processors continue to be the solutions of choice for the most powerful supercomputers in the world, powering 121 of the fastest systems on the latest Top 500 list, and 7 of the 10 most efficient systems on the Green 500 list. In AI, we made strong progress in the second quarter as we met key hardware and software milestones to address the growing customer pull for our data center AI solutions. Our AI strategy is focused on 3 areas. First, deliver a broad portfolio and multi-generation roadmap of leadership GPUs, CPUs, and adaptive computing solutions for AI inferencing and training. Second, extend the open and proven software platform we have established that enables our AI hardware to be deployed broadly and easily. And third, expand the deep and collaborative partnerships we have established across the ecosystem to accelerate deployments of AMD-based AI solutions at scale. We delivered on all three fronts in the second quarter. On the software and partnership side, Hugging Face announced plans to optimize thousands of their models for AMD Instinct, Ryzen, EPYC, Radeon, Versal, and Alveo platforms. To make it easier for developers to tap into the full performance and features of our AI hardware, we delivered a significant performance and feature update in our latest ROCm software and expanded support for AMD Silicon across the leading frameworks, including PyTorch, TensorFlow, Onyx, and technologies like OpenAI Triton. We are receiving positive feedback on the improvements and the new capabilities of our latest ROCm software stack from our AI customers and ecosystem partners. As an example, leading AI software company Mosaic ML recently highlighted that our Instinct MI250 accelerator delivers competitive training performance with minimal or no changes to the underlying AI software. On the hardware side, we announced our new Instinct MI300X GPUs designed to be the world's most advanced accelerators for generative AI. MI300X combines our next-gen CDNA 3 architecture with the industry's largest memory footprint and fastest memory bandwidth. These are critical factors in AI inferencing performance. Customer interest in our Instinct MI300A and MI300X GPUs is very high. Engagements with top-tier cloud providers, large enterprises, and numerous leading AI companies significantly expanded in the quarter. We are providing early system access and sampling both products with our lead AI, HPC, and cloud customers now, and remain on track to launch and ramp production in the fourth quarter. Turning to our client segment, revenue declined 54% year over year to $1 billion. Client segment revenue increased 35% sequentially as Ryzen 7000 series CPU sales grew significantly, led by the launches of new notebooks from the largest OEMs. We also launched new commercial offerings with our first Ryzen Pro notebook and desktop processors powered by our leadership Zen 4 architecture. More than 100 AMD-powered commercial PC platforms are on track to launch this year from HP, Lenovo, and other leading OEMs as we grow this important part of our client business. We expect our client segment will grow in the seasonally stronger second half of the year based on the strength of our product portfolio and increased adoption of our Ryzen 7000 CPUs, including the ramp of our Ryzen 7040 mobile CPUs that deliver leadership performance and energy efficiency and are the industry's first x86 processors with a dedicated AI engine. Going forward, we see AI as a significant PC demand driver as Microsoft and other large software providers incorporate generative AI into their offerings. We are executing a multi-generational Ryzen AI processor roadmap, which together with our ecosystem partners will fundamentally change the PC experience. Now turning to our gaming segment. Revenue declined 4% year over year to $1.6 billion, as higher semi-custom revenue was more than offset by lower gaming graphics sales. Sequentially, segment revenue declined 10%. Semi-custom SoC sales were strong in the quarter, as Microsoft and Sony had healthy console demand based on improved retail availability globally and the launches of new AAA games. In gaming graphics, we expanded our Radeon 7000 GPU series in the second quarter with the launch of our mainstream RX 7600 cards for 1080p gaming. We are on track to further expand our RDNA 3 GPU offerings with the launch of new enthusiast-class Radeon 7000 series cards in the third quarter. Turning to our embedded segment, revenue increased 16% year over year to $1.5 billion. Sequentially, revenue declined 7% as solid demand with industrial, vision and healthcare, automotive, and broadcast customers was offset by softness with communications customers as some operators slowed their infrastructure upgrades. We expanded our leadership adaptive computing product portfolio in the quarter, launching our new Versal Premium VP1902 adaptive SoC with advanced chiplet packaging, the industry's largest and most performant solution for emulating and verifying next-generation ASICs and SoCs. In the low end, we announced our Spartan UltraScale Plus FPGA family to address a new range of cost-optimized industrial, computer vision, healthcare, and robotics applications. We also released enhanced versions of our Vivado and Vitis software platforms that make it easier for customers to develop highly performant applications for our Versal adaptive SoCs. Embedded CPU sales grew in the quarter with the launches of new AMD-powered security, storage, and networking solutions from HPE, Fortinet, and other leading vendors. Looking into the second half of the year, after delivering 6 quarters of very strong year-over-year growth, we expect embedded segment revenue to decline in the back half of the year as lead times normalize and some customers reduce their inventory levels. We continue to be very pleased with our embedded design win momentum, and in particular, the growing revenue synergy opportunities we see based on our combined adaptive and embedded processing product portfolio. In summary, we executed well in the quarter against our strategic priorities. Looking at the second half of the year, we expect the PC market to grow seasonally with more normalized inventory levels across the supply chain. In the data center market, we see a mixed environment as AI deployments are expanding. However, cloud customers continue optimizing their data center compute, and enterprise customers remain cautious with new deployments. Against this backdrop, we expect strong growth driven by higher 4th-gen EPYC and Ryzen 7000 processor sales and initial shipments of our Instinct MI300 accelerators in the fourth quarter. Longer term, while we are still in the very early days of the new era of AI, it is clear that AI represents a multi-billion-dollar growth opportunity for AMD across cloud, edge, and an increasingly diverse number of intelligent endpoints. In the data center alone, we expect the market for AI accelerators to reach over $150 billion by 2027. We have increased our AI-related R&D, ecosystem enablement, and go-to-market investments to capture a significant share of this emerging market. The strong progress we are making executing our AI roadmaps and the rapid pace at which we are expanding our ecosystem of AI hardware and software partners makes us very confident we can deliver leadership training and inference solutions powered by our Instinct, EPYC, Ryzen AI, Versal, and Alveo platforms for our customers and partners. Now I'd like to turn the call over to Jean to provide additional color on our second quarter results and our outlook for Q3. Jean?
Thank you, Lisa, and good afternoon, everyone. I'll start with a review of our financial results for the second quarter and then provide our current outlook for the third quarter of fiscal 2023. We're pleased with our second quarter results with revenue of $5.4 billion and a diluted earnings per share of 58 cents. On a year-over-year basis, revenue declined 18% as growth in the embedded segment revenue was more than offset primarily by lower client segment revenue. Revenue was flat compared to the first quarter as growth in both the client and the data center segments was offset by expected declines in the gaming and embedded segments. Gross margin was 50%, down approximately 4 percentage points from a year ago, primarily driven by lower client segment performance, partially offset by strong embedded segment performance. Operating expenses were $1.6 billion, an increase of 3% year-over-year, primarily due to higher R&D investments. Operating income was $1.1 billion, down $914 million year-over-year, and the operating margin was 20%. Interest expense, taxes, and other was $120 million. For the second quarter, diluted earnings per share was 58 cents, compared to $1.05 in the same period last year. EPS declined on a year-over-year basis, primarily due to client segment performance. Now turning to our reportable segments for the second quarter. Starting with the data center segment, revenue was $1.3 billion, down 11% year-over-year, mainly due to lower third-generation EPYC processor sales as enterprise demand was softer and the inventory levels were elevated at certain MDC customers. Data center revenue grew sequentially with strong sales of our fourth-generation EPYC processors, specifically Gen 1, partially offset by decline in adaptive SoC product sales. Data center segment operating income was $147 million, or 11% of revenue, compared to $472 million, or 32% a year ago. Lower operating income was primarily due to lower revenue and increased R&D investment to support future growth. Client segment revenue was $998 million, down 54% year-over-year due to reduced processor shipment resulting from a weaker PC market and significant inventory correction across the PC supply chain. On a sequential basis, revenue grew 35% as we ramped our Ryzen 7000 series processors and the PC market conditions improved. Client segment operating loss was $69 million compared to operating income of $676 million a year ago, primarily due to lower revenue. We expect the client segment to return to profitability in the third quarter. Gaming segment revenue was $1.6 billion, down 4% year-over-year. Semi-customer revenue grew year-over-year, which was more than offset by lower gaming graphics revenue. On a sequential basis, gaming revenue declined 10% in line with our expectations. Gaming segment operating income was $225 million, or 14% of revenue, compared to $187 million, or 11% a year ago, primarily due to higher semi-customer revenue. Embedded segment revenue was $1.5 billion, up 16% year-over-year, primarily driven by strengths in the industrial, vision, healthcare, automotive, test, and emulation market. On a sequential basis, embedded segment revenue declined 7%, primarily due to weaker communication market demand. Embedded segment operating income was $757 million, or 52% of revenue, compared to $641 million, or 51% a year ago, primarily driven by higher revenue. Turning to the balance sheet and the cash flow. During the quarter, we generated $379 million in cash from operations. Free cash flow was $254 million. Inventory increased by $332 million to support the continued ramp of advanced technology products. We expect inventory to decline as we ship this product to customers in the second half of the year. At the end of the quarter, cash equivalent, and short-term investment was strong at $6.3 billion. Now turning to our third quarter 2023 outlook. We expect revenue to be approximately $5.7 billion, ±$300 million, an increase of approximately 2.5% year-over-year, and approximately 6.5% sequentially. Year-over-year, we expect revenue for the client segment to be up, data center segment to be flattish, and the gaming and embedded segments to decline. Sequentially, we expect the client and the data center segment to each grow by a double-digit percentage, and the gaming and embedded segments to decline. Non-GAAP gross margin to be approximately 51%. Non-GAAP operating expenses to be approximately $1.65 billion. Non-GAAP effective tax rate to be 13%, and the diluted share count is expected to be approximately 1.63 billion shares. In closing, I'm pleased with our second quarter top line and bottom line execution. We expect our new product ramps across the data center and the client segment to drive sequential growth into the third quarter. Importantly, our leadership product portfolio, data center and AI investment priorities, and the financial strength position us well for long-term growth. With that, I'll turn it back to Mitch for Q&A session.
Thank you, Jean. John, we're happy to poll the audience for questions.
Thank you. We will now be conducting a question and answer session. If you would like to ask a question, please press star one on your telephone keypad. A confirmation tone will indicate that your line is in the question queue. You may press star two if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. We ask that you please limit yourself to one question and one follow-up. Thank you. One moment, please, while we poll for questions. And the first question comes from the line of Matt Ramsey with TD Cowen. Please proceed with your question.
Yes, good afternoon. Thanks for taking my questions. Congrats on the results. I guess, Lisa, my first question is around the data center business. I think we're all across the industry observing a shift in workload and spending patterns like maybe we've arguably never seen. And your company's in a great position to participate on both sides of that, on the CPU strength and obviously in the AI space. Last quarter, you had given us some metrics around potentially being able to grow your data center business by 50% in the second half of the year versus the first half. And maybe you could give us a little bit of an update on how you're thinking about that milestone and the drivers of growth across CPU and accelerator for the back half. Thanks.
Yeah, sure, Matt. Thanks for the question. So you're absolutely right. It's a very dynamic market right now in the data center. We certainly see, let me go through some of the pieces. So on the positive side, we certainly see that acceleration of AI demand. From our standpoint, we see it in a couple ways. We have a number of design wins in AI deployments as, sort of the CPU that goes with GPUs as well as other accelerators. So in the head nodes, we've seen that positive on the CPU side. We've also seen some strong interest in our MI250 accelerator, which is currently shipping right now. And we see very strong pull on the MI300 accelerators that are starting production in the fourth quarter. So those are the positive market dynamics as we go into the second half of the year. We also see some of the softer cloud spend that is happening outside of AI as some of the cloud vendors are optimizing, sort of their CapEx. And enterprise, I would say, is still on the weaker side. But with all of that in place, we are expecting a large ramp in the second half for our data center business and weighted towards the fourth quarter. And we are still looking at a zip code of, let's call it 50% plus or minus second half to first half. So it's a big ramp, but when we look at all the components, I think that the customer pull is certainly there, and it's exciting to be in this part of the industry.
No, thank you for that, Lisa. I guess as my follow-up, still sticking with the data center business, your company's aggressively trying to ramp both the hardware and the software side of the MI300 programs to support AI. There's been some conflicting reports as to whether all of those deployments are on time. I think you've, in the prepared script, said what you guys think about that. I guess my question is really around the software work and the hardware itself that you're doing with your lead customers. Maybe you could give a little bit about, I guess, firstly, how the customer feedback has been on the performance of the hardware itself, and secondly, how you think the software work you're doing with your lead customers will translate into other customer deployments as we work through next year. Thanks.
Yeah, sure, absolutely. So, if I give you just some color on, sort of how the customer engagements are going, there's very strong customer interest across the board in our AI solutions. That includes, let's call it, multiple tier one hyperscalers that we're engaged with. It includes some large enterprises. And it also includes sort of this new category of some of these AI-centric companies that are, sort of very forward looking in terms of how they're deploying and building AI solutions. So, from that aperture, we made a lot of progress with our ROCm software stack. I'm actually, there's a lot more to do, but I would say the progress that we've made has been significant. We're getting lots of feedback from those lead customers. We're seeing, the benefits of the optimizations. So, working, also on the higher level, model frameworks, the work that we're doing with the PyTorch Foundation, the work that we're doing with Onyx, with Triton. And the key is we're getting, significant real-time feedback from some of these lead customers. So we're learning at a very fast pace. In terms of the feedback on, performance, a number of companies have now been able to look at MI250 across a broad range of workloads. And that's a good translation as you go to MI300, and the feedback's been, quite positive. We have, customers sampling either on our, lab systems. They're accessing the hardware or sampling in their labs, and I would say, so far, very positive. The pull is there. There's a lot of work to be done, but we feel very good about the progress of our overall, AI solutions for the data center.
Thanks, Lisa.
Thanks, Matt.
And the next question comes from the line of Aaron Rakers with Wells Fargo. Please proceed with your question.
Yeah, thanks for taking the question. Just kind of building on Matt's comments or questions. I just want to go back to kind of the implied, revenue for the data center business for the back half of the year. Jean, I think last quarter you had alluded to, for the full year, the expectation is still growing 10% or double digits, I should say, for the full year in the data center business. Just confirming that. And I guess what I'm really trying to ask is, I guess, given the guidance of flat year-over-year growth in data center in 3Q, it would seem, if my math's correct, you're implying a 50% or so increase, sequentially into 4Q. I'm just trying to frame exactly how you're thinking about the cadence of what, 4Q looks like underpinning that expectation.
Hey, Aaron, thanks for the question. I think as Lisa just mentioned earlier, it's a very dynamic market. There are puts and takes. We have a tremendous strong momentum with our product portfolio, but there's continued softness in enterprise market, and also cloud optimization is still ongoing. So overall, on balance, we think year over year, it's probably more like a high single digit. It's really, strong ramp, not only in Q3, right? Sequentially, it means double digit, strong double digit, and the Q4, of course, we're going to see continued sequential strong ramp.
Yep. That's helpful, Jean. And then just kind of following up on that as well. I mean, how have you guys kind of managed through with that ramp in mind, the supply chain side? I know that, your manufacturing partners talked about expanding their capacity significantly. Just curious of what you're seeing as far as being able to fulfill that degree of demand as we look into not just this quarter, but into 4Q.
Yeah, sure, Aaron. So, we have been really investing in our supply chain. Sort of the data center growth is so strategic to us that this has been, part of the strategy. So if you look at all aspects of the supply chain, from the wafers to the back-end capacity to some of the, specific components that you need to do something of the class of MI300, we've worked with, the entire supply chain. We feel that we have, ample supply for an aggressive ramp in the fourth quarter and into 2024. But this is certainly one of the areas that, we spent quite a bit of time to ensure that we do have that confidence.
Thank you.
Thanks, Aaron.
And the next question comes from the line of Toshiya Hari with Goldman Sachs. Please proceed with your question.
Hi, thank you so much for taking the question. My first one is on the data center business as well. I just wanted to follow up on sort of the Q3 to Q4 dynamic, and I do apologize if I missed this, but in the implied growth rate in data center in Q4, can you speak to what percentage of that is supercomputing? I think there's a big project that's slated to ship in Q4, and is there any contribution from the Instinct series outside of supercomputing as well, or is it primarily your server CPU franchise?
Yeah, sure, Toshiya, thanks for the question. So, as Jean said, into the third quarter, we expect double-digit sequential growth in data center. That's primarily EPYC, so that's primarily the Zen 4, let's call it the combination of, Genoa Bergamo, as that continues to ramp. As we go into the fourth quarter, there is an implied a significant ramp in revenue. I think there are multiple components to that. So there is the server CPU side will continue to ramp. As we see Zen 4 ramp. There is a sort of large, call it lumpy supercomputer win. So our El Capitan win will be in the fourth quarter, primarily, with a little bit in the first quarter. And then we will have contribution from both MI300X going to large AI customers as they start their initial ramps, as well as MI250s with a number of customers who have now view that as a very very good option for some of the workloads that are not necessarily the largest language models or the largest parameters, but let's call it more sort of the other AI workloads. So those are the components of the fourth quarter, sort of implied growth. Lots of pieces to it, but clearly a big piece of it is the MI300 ramp.
That's helpful. Thank you, Lisa. And then shifting gears a little bit, follow-up question on the client side. You talked about the business returning to profitability in Q3, which is great, but you're still well below where you were in 21 and 22 from an operating margin perspective. Can you speak to the competitive landscape in the client business? Is there a path back to, call it 20%, 30% operating margins there? And do you have any cost initiatives ongoing to get you back to that level of profitability in client? Thank you.
Yeah, sure. Maybe let me start, and then maybe Jean can add some comments. So look, I think the PC business has been sort of fairly volatile over the last number of quarters, from the pandemic highs to some of the inventory digestion that we were all dealing with. I can say that I'm pleased to say that I think the growth that we're seeing, that we saw here in the second quarter, and that we see in the second half, is the strength of our product portfolio. I think the Ryzen 7000 series is doing well. There's good customer pull. I think from a competitive dynamic standpoint, the business is always competitive, but we feel good about the most important thing that was a little bit of a drag on operating margins was the revenue, the revenue being low, as well as some of the we had a case where the sell-in was below consumption as we were normalizing inventory levels in the supply chain. As we get past that, what we see is, I think the client business, continues to grow. We believe that, client will grow into 2024 as well. In terms of some of the cost initiatives, we have been, let's call it optimizing, sort of the overall, R&D footprint, but maybe I'll let Jean comment some more.
Yeah, on the OpEx side, the team has done a great job during this process to really optimize the investment in client segment to be more efficient and effective. If you look at the overall company level, our OpEx has been largely flattish, but we are investing in AI data center and the strategic priorities we have, which generate a much higher return on investment. So we have optimized it. We feel pretty good about this level of operating expense to continue to invest in client segment. As Lisa mentioned, it's really about revenue. The model will leverage it to generate profitability. We should be able to get back to 20%.
Thank you.
And the next question comes from the line of Harlan Sur with JP Morgan. Please proceed with your question.
Yeah, good afternoon. Thank you for taking my question. Good to see the quarter-over-quarter inflection in your EPYC business targeted at enterprise customers. I think you did mention a continued muted environment in enterprise, but the team continues to drive share gains with global corporations or ramping Genoa. Are you anticipating your enterprise segment to contribute to the strong second half growth profile of your data center business?
Yeah, thanks for the question, Harlan. Look, enterprise business is very strategic to us. We feel that we're underrepresented. It's a place that we're putting more resources because again, when we look at the value proposition of Genoa and the entire sort of Zen 4 portfolio, we think it plays very well into the enterprise. So pleased to see the growth in the second quarter. We do believe that we're on a path to continue to grow into the second half of the year and beyond. And the key here is also investments in some of the go-to-market activities. So investing in more sort of business development folks that can call directly on these enterprise customers together with our OEM partners and ensure that our value proposition is very well understood.
Perfect. Thank you. And then on the accelerated compute side, general purpose compute demand might be muted in China, but there's a significant amount of unmet demand for accelerated compute in this region. And I know there were performance thresholds put in place last year. Maybe U.S. government might lower that performance threshold again soon. I'm not sure, but let's say barring that, right? Has the team looked into developing China-specific SKUs of your MI250 or your new MI300 platforms? It seems like the opportunity here is quite large.
Yeah, Harlan. Look, China is a very important market for us. Certainly across our portfolio. As we think about, certainly the accelerator market. Our plan is to, of course, be fully compliant with U.S. export, controls. But we do believe there's an opportunity to develop product, for our customer set in China, that is, looking for, AI solutions, and we'll continue to work in that direction.
Thank you, Lisa.
Thanks, Harlan.
And the next question comes from the line of Vivek Arya with Bank of America Securities. Please proceed with your question.
Thank you for taking my question. The first one, just a clarification. Would it be reasonable to assume that your GPU accelerator sales, could be about, say, 500-ish million this year, so about 7-8% of data center sales? And if that is the right number, does it mean your server CPU sales are effectively flattish year on year this year?
Yeah, I mean, Vivek, I don't know that I would go into quite that that granularity. What we will say is, the GPU sales in the first half of the year were very low, as we were, sort of in a product transition timing. As we go into the second half of the year, in particular the fourth quarter, we'll have MI300 ramp. I think your number may be a little bit high in terms of the GPU sales, but overall, in general, I think our expectation is that, as Jean said, the data center business, given all of the market dynamics, we see it up high single digits year on year. We see, much, better second half compared to first half, and I think the product portfolio and the ramp of Genoa and Bergamo, as well as the ramp of MI300, are key components of the second half ramp.
Thank you, Lisa. And for my follow-up, just kind of a broader question on AI accelerators in the commercial market. So I'm excluding the supercomputing, the El Capitan projects, et cetera. What is AMD's specific edge in this market? There are already strong and established kind of merchant players. There are a number of ASIC options. A number of your traditional competitors, Intel and others, and several startups are also ramping. So my question is, what is AMD's specific niche in this market? What is your value proposition, and how sustainable is it? Because you're just starting to sample the product now. So I'm trying to get some realistic sense of how big it can be and what the specific kind of niche and differentiation is for AMD in this market.
Yeah, sure, Vivek. So I think maybe let me take a step back and just talk about, sort of our investments in AI. So our investments in AI are very broad. And, I know there's a lot of interest around data center, but I don't want us to lose track of the investments on the edge, as well as in the client. But to your question on, what is our value proposition in the data center? I think what we have shown is that, we have a very strong capability with supercomputing, as you've mentioned. And then as you look at AI, there are, many different types of AI. If you look across training and inference, sort of the largest language models and what drives some of the performance in there. When we look at MI300 is actually designed to be a highly flexible family of products that looks across, all of these different segments. And in particular, where we've seen a lot of interest is in the, sort of large language model inference. So MI300X has, the highest memory bandwidth, has the highest, memory capacity. And if you look at that inference workload, it's actually it's very dependent on those things. That being said, we also believe that we have a very strong value proposition in training as well, when you look across those workloads, and the investments that we're making, not just today, but going forward with our next generation, MI400 series and so on and so forth. We definitely believe that we have a very competitive and capable hardware roadmap. I think the discussion about AMD, frankly, has always been about the software roadmap. And we do see, a bit of a change here on the software side. Number one, we've put a tremendous amount of resource on it. So, bringing together our former Xilinx software team together with the AMD, base software team, we've dramatically increased the resources. And also, the focus has now been on, optimizing at these higher level models. So if you think about the frameworks around PyTorch and Triton and Onyx, I think many of the new AI centric companies are actually optimizing at a different level, and they're working very closely with us. So in this place where AI is tremendously exciting, I think there will be multiple winners, and we will be first to say that there are multiple winners. But we think our portfolio is actually fairly unique in the sense that we do have CPUs, GPUs. We have the accelerator technology with Ryzen AI on the PC side, as well as in the embedded side with our Xilinx portfolio. So I think it's a pretty broad and capable portfolio.
Thank you, Lisa.
And the next question comes from the line of Stacy Rasgon with Bernstein Research. Please proceed with your question.
Hi, guys. Thanks for taking my questions. I wanted to first go back to the Q4 data center guide. So if I do my math right, it's something like $700 million sequentially in data center from Q3 to Q4. So how much of that is MI300 versus CPU? And given the lumpiness of the El Capitan piece, what does that imply for the potential seasonality into Q1 as most of it rolls off?
Yeah, sure. So it is a large ramp, Stacy, into the fourth quarter. I think the largest piece of that is the MI300 ramp, but there is also a significant component that's just the EPYC processor ramp with, as I said, the Zen 4 portfolio. In terms of the lumpiness of the revenue and where it goes into 2024, let me give you kind of a few pieces. So I think there was a question earlier about how much of the MI300 revenue was AI-centric versus, let's call it supercomputing-centric. The larger piece is supercomputing, but it's meaningful revenue contribution from AI. As we go into 2024, our expectation is, again, let me go back to the customer interest on MI300X is very high. There are a number of customers that are looking to deploy as quickly as possible. So we would expect, early deployments as we go into the first half of 2024, and then we would expect more volume in the second half of 24 as those things fully qualify. So it is going to be a little bit lumpy as we get through the next few quarters, but our visibility is such that there are multiple customers that are looking to deploy as soon as possible, and we're working very closely with them to do the co-engineering necessary to get them ramped.
I mean, but like of the $700 million, it's like $400 million of it El Capitan, or is it $500 million or $300 million? Like how big is the El Capitan piece?
You can assume that the El Capitan is several hundred million.
Several hundred. Okay. For my follow-up, just gross margins are you're coming up in the second. I mean, they still kind of missed in the quarter. I know they rounded up to 50, but they were 49.7. I know you're getting 51 for Q3. Like, Jean, where do you see gross margins sitting like in Q4 as we exit the year?
Yeah, I think the gross margin is for us the primary driver, as we discussed in the past. It's really mixed. And if you look at our guidance or outlook of Q3 gross margin of 51%, it's more than 1 percentage point improvement sequentially, despite of very significant headwind from embedded business declining in Q3. So the data center and the client business are expected to grow double digits sequentially and provide a positive impact on the gross margin, which actually more than offset the headwind from embedded business. So going into Q4, again, we're not guiding Q4, and it's going to depend on mix. I would say one thing is you will have a similar dynamics, right? The data center is expected to grow very significantly. At the same time, we're going to have the same headwind from embedded business declining sequentially. So overall, we do expect the gross margin to improve from this level going forward.
Okay, thank you.
And the next question comes from the line of Joe Moore with Morgan Stanley. Please proceed with your question.
Great, thank you. You've talked about the embedded business declining as you move into the second half. Can you give us a sense for how much, and is that decline a function of the comm infrastructure market, or are you seeing weakness, beyond that part of the market?
Yeah, sure, Joe. Thanks for the question. So look, when I look at the embedded business, I think we should start by remembering that we're coming off of 6 quarters of very strong growth. I mean, this business has performed extremely well, and very pleased with the overall momentum in the business. To your exact question of what we're seeing in the markets, we're actually seeing the core markets hold up pretty well. So let's call it aerospace and defense strong, industrial vision and healthcare strong, test and emulation strong. We are seeing communications weakness, so that is the primary driver of the second half commentary. And there's also some inventory optimization, as you might expect, since our lead times have come down over the last several months. So in terms of zip code, I would say think of it as double-digit down sequentially in the third quarter, and that's the current view that we have. But overall, the business has been extremely strong for us. So I think this is sort of an expected decline as we come off the cycle.
Great. And any sense for beyond this quarter, since we've asked you so many Q4 questions already today, but any sense for is that kind of the bottom level, or do you expect there to be some continued contraction?
As Gene would say, we're not guiding for the fourth quarter, but I think you should expect embedded sort of in that similar zip code. Yeah, that's what I would say.
Okay, great. Thank you.
And the next question comes from the line of Timothy Arcuri with UBS. Please proceed with your question.
Thanks a lot. Gene, my first question is on inventory. You said it's going to come down a bit as you ramp into the Q4. Obviously you have a big Q4. Can you sort of shape that out for us? Before this, normalized inventory days were kind of 90 to 100 days. Where do you think you're going to exit Q4 in terms of inventory days?
Yeah, Tim, thanks for the question. I think as we ramp those product lines in Q3 and Q4, you will see inventory come down first in Q3 and in Q4 again. I think the inventory days of inventory probably will be around 110 to 120 days. The key thing is if you look at a lot of our product, they are like advanced process technology, 5 nanometer, 4 nanometer, 6. The manufacturing cycle tend to be long. So in the longer term, you should expect us from days of inventory be more around 100 to 120 days versus, traditionally like 80 days or 75 days. That would be too short for really most advanced process technologies.
Thanks a lot. And then my follow-up is for you, Lisa. So, if you kind of add up the units, the customer interest, you can easily get to several 100,000 units. It seems to me for the MI300X, next year. So the question really is on on the supply chain and particularly CoWoS. Do you think that's going to be a bottleneck for you? I know that they've been expanding capacity. I know you've been trying to procure more there. Can you sort of talk about that, and sort of do you think that supply could become a limiting factor for you next year? Thanks.
Yeah, absolutely. So I'm not going to comment on the exact units, but what I will say is that we've been focused on the supply chain for MI300 for quite some time. It is tight. There's no question that it's tight in the industry. However, we have sort of commitments for significant capacity across the entire supply chain. So CoWoS is one piece of it. High bandwidth memory is another piece of it. And then just the general, the general capacity requirements. And look, our goal is, to make this a significant growth driver for AMD. I think it's a great market opportunity. We love the engagements with customers, and it's our responsibility to provide the supply for the demand, and so that's what we've been working on.
Thanks a lot.
Thanks, Tim.
And the next question comes from the line of Christopher Rowland with SIG. Please proceed with your question.
Hey guys, thanks for the question, and more on the MI300 opportunity that you guys called out as a multi-billion-dollar growth opportunity. I was wondering if perhaps you could put a time frame around that multi-billion-dollar opportunity. But more specifically, have you guys ported over MI300 LLMs to MI300? Have you looked at the performance? How do they perform? Are you excited about that? And then in terms of hyperscale uptake, is it the X version, the GPU only version that you expect to be the biggest seller here? And have you had any semi-custom kind of configurations here, that potentially might even include an FPGA or other kind of Lego movements on the MI300? Thank you.
Sure. So there were a lot of aspects to that question, Chris. So, let me try to give you some framework here. I don't think we're ready to talk about, timing yet of revenue numbers. What we will say is we do believe it's a multi-billion-dollar opportunity. I think 2024 is a very important year for us. Ramping MI300 in multiple customers is sort of in over the next several quarters is very important. I think I mentioned earlier in the Q&A that the customer interest is actually diverse, which is great. It includes, sort of what you would expect in terms of the large tier one hyperscalers. But I think the, sort of these new class of, sort of AI-focused companies have been working very closely with us. And then some of the large enterprises, are also looking at, ramping up their efforts. The performance that we see is strong. I think the large language model work that we've done a lot of it on MI250, and we've seen, very good, sort of very good results. That's on both training as well as inference. I think as we go through MI300, again, the early results are strong. For AI applications, what we're seeing now is MI300X, so let's call it the GPU-only version, is the one that is, sort of most prevalent in the AI customer engagements. But the MI300A, actually, which is, sort of where we have the CPU and the GPU more closely coupled together, is also of interest. So I think the key is I think we've built a platform that does allow people to kind of choose what is best for the models and for the workloads that they're trying to enable. And that's what we're working on.
Great. And just as a quick follow-up then, Ciena, telco is a market kind of owned by your competitor there. They have a lot of software around telco. What kind of share do you think you can take in the telco market from them over the next few years?
Yeah, we're excited about Ciena. I think Ciena, fits, again, it's as you said, it's a niche that we haven't previously been focused on. I think our interactions with the telco suppliers are they're anxious to have, Ciena be a part of their portfolio. Ciena is also one that we'll use for, other edge applications, or let's call it lower end applications that need the performance of Zen 4, but perhaps not the heavy platform that we have on the Gen 1 Bergamo. So, we do think we're starting from a very low point. So there's an opportunity to gain share over the next couple of years, and we'll focus on that.
Thanks so much, Lisa.
Thanks, Chris.
And the next question comes from the line of Chris Danely with Citi. Please proceed with your question.
Hey, team. Thanks for squeezing me in. Lisa, so if the MI, 250, 300, et cetera, ramp or the revenue is mostly GPU only, what kind of an impact would that have on the on AMD gross margin? Would that still be gross margin accretive or dilutive or net neutral to your corporate gross margin?
Yeah, thanks, Chris. So I think let me just make sure I get the statement clear. So both MI300A and MI300X will be part of the ramp, particularly in the fourth quarter, and as we go into next year. For the AI-specific applications, we are more heavily weighted towards MI300X, just given sort of where the software is written. And to your question about gross margins at the corporate level, so we would expect that our AI business will be accretive to gross margins at the corporate level. And obviously, as you start the ramp, there's a little bit of learning, but overall, we expect it to be accretive to our corporate gross margins.
Great. And then for my follow-up, I just had, I guess, clarification. So it sounds like most of the MI revenue you have in the hopper right now, or at least the committed revenue, is LCAP. Is that true? And do you have other, I guess, confirmed or hard orders for that, or maybe just spend some time, telling us, how you're working with the customers or what it takes for them to go from, hey, we're interested, to here's a purchase order?
Yeah. So maybe if your question is, do we have other customers who are committed to MI300 other than LCAP? The answer is yes. We have a number of customers who are actually committed. And the way these things go, actually, it's not very different than how a server ramp goes, right? I mean, one starts with an initial deployment, ensures that the software works, ensures that we have all of the reliability and capability in the data center, and then they ramp from that. I will say the difference in AI deployments is I think customers are willing to go very quickly. There is, sort of a desire and a agility because we all want to accelerate the amount of AI compute that's out there. And so, the speed in which, customers are engaged and customers are making decisions is actually, faster than they would in sort of a normal, sort of regular environment. And that's great. I think that's helping us, as I said earlier, learn, perfect the software, get all the capabilities in place for a significant ramp next year.
Great. Thanks, Lisa.
Thanks.
John, we have time for one more question.
Okay, and our final question comes from the line of Harsh Kumar with Piper Sandler. Please proceed with your question.
Yeah, hey guys, thanks for letting me ask a question. Lisa, we're looking forward to an exciting second half for your company. I had a quick question on the server share. Do you think that there is a theoretical limit to the share that AMD can get? Historically, initially, we heard 80-20 was a prevailing rule, then you busted through that. Now we're hearing customers say, well, 70-30 is more like it. More importantly, are there any large vendors for your server business where you have significantly more than 30% share, let's say 40 or even 50% share? And I have a follow-up.
Yeah, sure, Harsh. Thanks for the question. Look, I think in the server business, I think the most important thing for our customers is that we have a strong roadmap and that it's a roadmap that they can count on. And we've been building that, sort of working model, that roadmap, and that trust over the past 4 or 5 years. So I don't think there's any theoretical cap on AMD share. I would say if we look today, there are multiple customers who have us deployed in their data centers at more than 50% share. And from our view, the place where we have perhaps been a bit more underrepresented is in the enterprise. And that's just a matter of, sort of the breadth of enterprise customers and the breadth of enterprise software. So, we believe that, we have leadership today, and we will very, very focus on ensuring that we continue leadership in the market. And, with that, there's an opportunity to continue to gain share in the server market.
Thank you, Lisa. For my second one, can you help us think a little bit about the generative AI spend? Let's say, if you can cite for us some kind of metric as to how many dollars of spend today are you seeing from your customers on generative AI for, let's say, each dollar of regular, server CPU spend. Is there a metric that we can think of? Is there a trend today, and where do you think it can be in a couple of years?
Yeah, I think, Harsh, the best way to answer that, and again, we're all, sort of, it's all a crystal ball as to what's going to happen over the next 4 or 5 years. There's no question that the demand for generative AI solutions is very high. and there's a lot of compute capacity that needs to put in. The way we've sized the market is, it can perhaps grow at a rate of, let's call it, 50% CAGR plus or minus over the next 3 or 4 years. So that would take us to, $150 billion market by the time you get to 2027. Now that's all accelerators in the data center. So that includes, GPUs, that includes, other ASICs and other accelerators. But I think we have an opportunity to address a large portion of that market. So that makes it, a very, clear priority for us. It's our number one strategic priority, and we'll, continue to work closely with our customers as they optimize between CPU and GPU spend.
Thank you, Lisa.
Thank you.
Great, John. That concludes today's call. Thank you to everyone for joining us today.
All right, guys. So that is the end of the call today. Let me know. AMD still sitting pretty neutral from everything. Again, still green in pre-market. It's at 122s. What I will say, guys, is for those at home, don't be influenced too much by people in the chat. There's some people who have been basically calling for a crash for the last year as the market pushed up. And so if I would have listened to the people in chat, I would have made no money over the last year. And so people are incredibly biased by their own positions. The stock market is full of a lot of ego. And so nobody ever wants to admit they're wrong. And so usually they just kind of pretend they never were, bearish or bullish or whoever was wrong. And again, always make your own assessment. Nobody knows. And people in the chat are too biased. And I'm too biased as well. So always figure it out yourself. Nobody knows whether you should buy or sell tomorrow, today, all that good stuff. And I hope you guys understand that. We're all just a bunch of random people on the internet. If you haven't already, check out Moomoo. Again, Moomoo is one of my sponsors. They're who I'm using to trade stocks, and they are incredibly useful. You can look up their news. This week, we got a lot of big stuff. So if we look at the calendar, in terms of earnings this week, we have possibly the biggest arguable earnings in a long time. On Thursday, we have Apple and Amazon earnings. In terms of economic data, if we look at this, we could type in North America 3-star. We have tomorrow non-farm employment numbers coming out at 8:30, jobless claims on Thursday, U.S. services and non-manufacturing PMI on Thursday. Friday, we have payroll numbers and unemployment numbers, which are all very relevant for market activity. Again, you can see their portfolio section. You can follow different traders, see what their portfolio looks like, and then mimic their trades. A bunch of good traders. You can see when they're making transactions. Options has free unusual option activity. Again, their headlines are really, really useful. If I go to explore here, there's some really cool stuff. Like I can build my own screeners, and I've been playing around building like a low PE screener. I can look at hot strategies and see arc tops, horn tops, bearish flags, symmetrical triangles, and it'll show me what symbols that shows up as well as like a free heat map, best performing sectors and hot stocks and pre-market after hours. If you open up an account and deposit at least $100, you get 5 free stocks. If you open up an account and deposit over 1,000, you get 15 free stocks. You open up an account and deposit over 5,000. As long as it's your first account for all of these, then you get 15 plus a free share of Google or Tesla. And I did get Tesla. And again, there's zero commission stock trades. It's open the entire time of pre-market, which is why I moved over from TOS. You can check out the link here. Great way to help support the channel. You can check out the links in the description. You can also check out Top Step, which is a funded program for futures. And a lot of day traders should be trading futures over stocks. They try to use cash accounts or day trade penny stocks, but penny stocks is just super risky. And the futures market is, I'm not saying it's not risky, but there's more liquidity. Most pro day traders actually day trade futures, and there's no PDT rule. You can day trade short, all that good stuff in futures, and you can day trade the S&P 500, the NASDAQ, currencies, gold, silver. But again, there's no PDT rule, and Top Step is the most legit funded program in the world. They pay out millions, fund thousands of traders a year. What they do is they give you a demo and they test your skill through a challenge, right? And most people are going to fail this challenge, but the base one's the 50K challenge. It costs $49 right now on sale. If you can hit 3K in profit once they give you a 50K demo, if you can make 3K in profit on that demo without losing over 2K, and while following the rest of their rules, they fund you 50K with a 90% split. It really is the best of both worlds where you have limited risk at only $49. If you lose, you're only out $49. But if you could pass the combine, again, which is difficult, they fund you between 50K to 150K with a 90% split. So the most legit one in the world, they pay out millions and fund thousands a year. You can check out the link to both of those in the description. We'll see what AMD does tomorrow morning, guys. Again, I'm sponsored by both of those companies, and so I'm incredibly biased in their favor because they pay me money. But check them out. Great way to help support the channel. I love you all. I'll be safe. Y'all be good. I'll see you guys tomorrow. Big earnings for Apple and Amazon on Thursday. That'll be crazy big. But we'll be back tomorrow. We got the non-farm employment change numbers coming out soon. Good luck, guys. I'll see you guys later. Good luck. Y'all be safe.